Welcome back to Market on Close. I'm Marley Caden. Boeing will be in focus next week as the plane maker will report earnings on Tuesday. For the quarter, the company is expecting a loss of $1.47 per share on revenue of $21.86 billion. Tariff risk remains front and center as the U.S. is threatening 30% import tariffs on EU goods. And according to Ryanair, that could delay deliveries. Ryanair believes that its fixed price contracts mean that Boeing would be on the hook for that extra expense. Now, joining me now is Rick Ducat, our lead market technician, to take a look at Boeing and the broader sector, which of course is industrials here. Now, Rick, as we're taking a look, how does the broader sector look by comparison to Boeing, and what are you seeing in the charts?
Yeah, Boeing is one of those companies that we had talked about recently many times on this show for a variety of reasons here. But we can see overall defense and aerospace outperforming the broader industrial sector as well as the overall market here. The ITA ETF is perhaps a better benchmark for how Boeing is doing here. That's more of the aerospace and defense name specifically. The industrial sector includes, lots of other companies. And the laggards in that group are machinery and ground transportation, by the way, and freight. But aerospace and defense doing quite well. Boeing specifically, mostly in line with the XLI, though. And if we were to look more specifically at that XLI chart, we can see that still looking pretty darn good here, near those highs. Pushing above a heavy volume area here near that 150, 151 level here, breaking out to the upside from an upward channel type shape here. So perhaps the next level to watch, the +2 standard deviation channel between about 157 and 158 to the downside, a notable area, 150 based on some technicals aligning there.
And as I'm looking at some of the analyst action on Boeing right now, they just got an upgrade from KGI Securities to buy from hold. But 71% of analysts covering the company have buy ratings on it, which is higher than the average for the S&P 500, which is about 55%. So, what's it being expected from Boeing going into their earnings?
Yeah, and Boeing, one of those companies lately that just couldn't seem to stay out of the headlines. We talked about United Health yesterday. That was another one. But now it's seeming more like Boeing is perhaps making some good headlines. The news I was seeing today, Federal Aviation Administration got a new administrator saying that they would review Boeing's supply chain before removing a cap on some the amount of planes it can produce per month, but also saying that they find both Boeing's culture improving, but it's still far from lifting the period of heightened oversight here. And the reason I thought this was important is because it's pretty much in opposition to what Boeing's CEO was saying in May, that he was pretty confident that they could increase production to 42 jets a month. The FAA is saying seems to be saying that's pretty far off. So an interesting discrepancy there. But, other news, White House said Japan plans to buy 100 Boeing planes as part of the trade deal. Demand seems to be improving overall. Travel demand seems to be holding up here. So really, it seems like things are perhaps turning around. And if we were to look at the chart here, we can see that Boeing has remained pretty steady near these highs during the past couple of weeks here as traders await earnings. We can see to the downside a supportive area near about 224, 225. Our 21-day EMA and our +1 standard deviation channel come together around that area. If we were to look at Boeing's own +2 standard deviation channel, that solid orange channel to the upside there, it comes in around 248. That could be another area to watch to the upside. Momentum slowing down as we head into earnings. Pretty common situation, though not really much of note with that.
And how about volume for Boeing? Are they trading heavily ahead of their earnings?
Yeah, not particularly heavy today. Today is mostly about average here. Most of the trading on the call side between about 220 to 250. On the put side, 180 to 230, a bit of a different range there. Mostly going out to October, November for both sides there. If we were to look at opening interest, though, there is the option contract expiring next week that would align with earnings, but the open interest was really quite a lot higher in the August monthly here. So we're going to focus on that one instead. That gray shaded area, our expected move is about 214 to 252 or so when I checked earlier, about a 7.25% move, plus or minus possibly there. On the call side, the range 180 to 285. That's where most of the activity is. The highest activity, the highlight was at 250 though. And on the put side, it's kind of a pretty different map here, kind of an interesting change here. Much lower. You can see that the range on the put side is more like 100 to 200 really, and the highest activity was actually more at the 230. So outside of that area completely there, we had kind of an outlier move. So interesting that those were the highest activity was much closer to current prices here. So an interesting thing to watch possibly there. But you know, that would be the general situation here as we would have some time to digest earnings after that and kind of and see things shake out for the monthlies.
Yeah, I mean, that certainly is interesting considering right now they're trading at 230, 273. So a potential significant downside as I take a look to your chart on the screen over here. Rick, we appreciate you breaking all of that down for us. Again, that's Rick Ducat, our lead market technician here on the Schwab Network.